Welcome everyone to the Kindle Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Today is the final trading day of August. We're going to see the print up to the 3520 level, and the RXT on the monthly market grid is at 3520. I never thought we would print that high. Thought we would get into around 3460 maybe, but not to 3520. I will get a new calculation for the market grid for September after the close tomorrow, and I'll cover that in tomorrow night's video. As we look at this week, this is also the beginning of September, and I've been talking a lot about the September and October period are going to start to show a lot of different metrics than what we saw from the Q2 quarter. We're finally going to start to see mixed metrics on a month-to-month basis, and this is going to most likely start to bring in some doubt about how the economy's doing. After Chairman Powell's speech on Thursday, I'm not sure anyone cares. The futures are up overnight. We're seeing the beginnings of potentially a strong market for Monday as we come in after the big rally of last week. The S&P was up 3.3%, NASDAQ up 3.4%, and we're just seeing this move just continue without any hesitation at all. Once we broke above some key numbers last week, there was no looking back. As I set things up a week ago, this is exactly what I expected. We would surge into Powell's speech on Thursday. As we look forward to this week, we've got a lot of information to absorb. On Monday, we'll get Dallas manufacturing. On Tuesday, we'll get PMI manufacturing and ISM. These are likely to continue to show positive numbers. Now we're getting construction spending, and I expect this to also be up. On Wednesday, we'll see ADP come out, expected to show about 1 million to 1.2 million new jobs. On Thursday, we'll see unemployment claims. They're expecting to see those come in below 1 million on new claims. Now, we did see some increase in the last couple of weeks of the amount of claims. We'll see if that trend continues, but I don't think that will be as material as coming into Friday's unemployment numbers. Now, the unemployment's expected to downtick to 9.8%, and we're expected to see 1.4 million new jobs. Once we get into Wednesday, it's going to be about all of the employment numbers that are coming out, everything from the claims to ADP to ultimately the employment numbers themselves. There's some other metrics that folks are going to be looking at in the average work week and some other elements, but I think the main headline numbers are going to be what everybody's watching. Now, we're also going to get all of this information ahead of a long weekend, because next weekend is Labor Day weekend. We're likely to see some squaring of the books ahead of the long weekend. I will cover that as we go through the week on Thursday and Friday's videos. The other element that's coming out, and I'm not sure why this is such a big deal, but the stock splits for Apple and Tesla, and these are promoted as some big deal. And basically all that's really happening is there's going to be a lot of stock out there that wasn't in existence before. So we're going to quadruple and 5 times the stock in Tesla, but somehow this is a bullish thing. And I'm not sure it's that bullish, but there is data that suggests over a longer term after a split, the stocks do reasonably well, but we're in a whole different metric in the way that we trade right now, just because of the amount of players that are chasing the same stock. Even though there's going to be more, there seems to be a perception that somehow this is instantly bullish. We've seen both of these stocks run up into these events. We'll cover the individual stocks. We'll see how they're trading on Wednesday's live stream, so make sure you tune in for that. Just one comment on the Powell remarks from Thursday. I believe they're going to come out with another tranche of money to come into the market. It could be possibly related to the employment numbers coming out on Friday. Depending on these numbers and how they come in, maybe there will be an event over a long weekend. I talked about the Fed entering into a new era, and they signaled that that's exactly what they're planning on doing. The old era was the Yellen and Bernanke era, which was signal everything before you do it. Now I believe they're going to be looking at some surprises and being able to shock and awe the markets from time to time if they see something they don't like. This is how it was when Volcker was chairman and also in Greenspan. They would show up with significant events if they saw any type of stress around the elements that they said they're focused on. We do know that the Fed is focused on the employment situation. They're also paying very close attention to these manufacturing numbers, as they are very important if we're going to see any type of continued capacity of the economy coming back. And this will have a lot to do with some of the themes that I'm working on right now, which I'm not quite ready to deliver. I've got some more work to do over the next several days. Hopefully by the live stream on Wednesday, I'll have some things to talk to you about. Let's go ahead and take a look at the charts, see what they're telling us for this week. Beginning with a review of the WaveTech database, on a short-term basis, we're continued to be just above the 60% bullish range at 60.9. We did see some positive rotation on the short-term models where there were about 500 new buys versus 300 sells. So the ratios are slightly positive, but nothing significant. My expectation is that we'll continue to see a liquidation of these positions, as many of them are still very long in the tooth. And this is evident when we look over on the right here. The percent profit fulfilled is 78.5%, and the percent duration fulfilled is 77.6. Now, we did see the percent bullish on the short-term database reach 90%. We also saw both of these other metrics, the duration and the percent profit, reach this as well. One of the things that continues to happen here is our intermediate database continues to see a substantial number of buy signals coming in. We did get 600 new buys versus only 200 sells, so a nice positive ratio on 1.2. It was a bullish ratio and a positive on 3.2. When we look at the duration fulfilled here, much different than the short-term models. The average duration right now is only 41 days, or otherwise only 20% of the duration has been fulfilled. As we look at the profit fulfilled, right now about 30% of the profit is fulfilled, where average profit of the 11,541 symbols that are out there of a 9.1% gain, but the average profit is 29. So we're about 30% through this. And so there's still a lot ahead of this market from an intermediate standpoint. What this suggests is there's a very low probability for any major decline to come from this type of position with over 11,000 symbols long in the database. Looking at the S&P 500 cash, we're continuing to see the market grid move up in this upward slope. Today's range is likely to be an S1 R2 range, which is 3,500 to 3,523. Futures are positive overnight, suggesting a higher opening, where we're going to open above this 3,515 level. It's possible if we get through 3,523 to surge towards the R3 number 3,532. So we're likely to see about a 20 to 25 handle range today. We may not get anywhere close to the 3,500 level. It depends on how strong we open in the morning, whether we're going to be able to print down to that number. Since it's the final day of the month, I also want to go through the weekly and the monthly configuration as well. Now, before moving on, the PPMs are very positive here. We have a 0.40, 0.37, and 0.29 across the board at all three levels of trend. We are confirmed that we are in uptrend, and the probabilities for decline particular position is only 30%. So there's not going to be any big rollover here at all. We're going to continue to move up in the grid. Now, the one thing that I discussed on Friday's video is we were able to close above the RXT on a weekly basis. Now, this does set up a cautionary type pattern. When you get a close on over RXT weekly number, it signals that there's a likelihood of a sideways range to unfold for at least 2 bars, and that would suggest for this week and next week we'd see a high-level consolidation. But that does not mean that we can't print into higher prices on the grid. The numbers on the screen suggest a minimum. R1 is 25.23. We're likely to print that off the open in the morning. But R2, R3, which is 35.41 to 35.59, are likely. What I'm going to be watching closely is the action, but if we reach these levels on an intra-week level. But I think we're going to stay positive with all the numbers coming out after Wednesday, ADP, the unemployment claims, and then ultimately the employment situation on Friday. I don't think market participants are going to make any big moves ahead of that. But the final level I want to review is the monthly. And I mentioned this in the opening comments that what we're seeing here is the RXT numbers 35.20. We printed 35.09 on Friday. The futures are telling us we're going to be about 15 higher, so we're likely to print above 35.20 on a monthly basis. I do remember covering this in the beginning of the month. I thought we could get to 33.95, and the R3 number was 34.61. I didn't see us getting above that number, but we obviously have, and we're printing all the way up to the RXT. After the close on Monday, I will have new numbers for the month of September, and we'll discuss those tomorrow night. Just as we discussed in the S&P, on August 26th, we were able to close above the RXT number on the NASDAQ, which was 11,902. The close was 11,991. And we did go sideways for 2 sessions. It was like we were going to print toward these upper numbers. We've already printed R2 overnight, 12,089, high 12,091. So next numbers in line, R3 to RXT, which is 12,140 to 12,186. Most likely we'll try to print a R3 tomorrow, 12,140. I don't think we'll see anything close to the S1 number at 11,945. Maximum downside risk S1, 11,945. Expected high R3, 12,140. The next market I'll cover is the US dollar. We continue to see the dollar going lower. I discussed in the opening comments that I think the Fed is going to come up with another big tranche of money, and that's likely to put more downward pressure on the dollar. We'd have to go all the way back to the 2018 numbers. Looking at those numbers, then there's a possibility of moving down into the 88 handle, which is another $4 from the current levels. But the one thing that I want to point out here as we look at the current prices is that we are starting to see PPMs on a weekly basis starting to show signs that we're going to bottom. Now, we're still below the first and second derivatives on both the PPM1 and PPM2. If we can cross above the first derivative on those indicators, that will start to tell us that we're getting close to a bottom. Now, about 2 weeks ago, it looked like we were very close to being able to do that. The PPMs reversed as this downtrend has continued to unfold. Looking at the monthly, we had a big reversal in July, and this month has been a bit of a follow through, but we're also in similar position on the PPMs where we have substantial downside pressure, but these are the type of numbers we get to when a extreme price is starting to print. Now, I don't think we're here yet. As I mentioned, we could see something as low as 88. I believe if the Fed does print some more money, then there'll be more downside, and ultimately that's going to be bullish for the metals overall. The final market that I'll cover tonight is gold. I discussed on Friday that if we could close back above the 10-day moving average, above 1959, that would be very positive. We were able to achieve that, and we closed at 1974. In spite of that, we did not see a huge pickup in the PPM, so there's still some work to do, but that 1959 level will be the support for the next several days. As we look at the potential market grid for today's session, the R1 is 1989. We printed 1985 so far. S1 1960. We've seen a low of 1972. We're likely to see an R1 S1 type day. I don't see us getting above the 1989 level. As I mentioned last week, there's some key numbers that I'll talk to you about on the weekly chart that will be the huge pivot for this pattern. Most likely what we're going to see on a short-term basis is further consolidation before we start to see any material moves start to the upside. Looking at the weekly chart, you'll see here that now the 10-week moving average is 1926. That's going to be the major support on the downside. The PPMs are at 0.93. Tells us there's only a 10% probability to decline under that numbers. If we did get any huge volatility, your new buy point would be 1926. Last week it was 1920 to 1900. We printed 1908. So we saw a nice reversal off of that number. Now the key numbers here to watch for this week are going to be the 2004 level, and a number that's not on the grid, but it's a number that I have as a pivot off another technique that I use, is 2015. So 2015 is the big number. From a grid standpoint, we could print up into this 2004, 2003, 37 this week. The ultimate low is probably going to be this S1 on a weekly, be 1945. We're not going to see S2. Just make sure that you follow the daily grid as far as your trading goes. Finally, looking at the monthly graph, this is the same sort of thing that we continue to see on the RXT number. Last month, we saw a close at 1985. RXT was 1969, so we closed above that. We could see at least 2 months of sideways to down. We're slightly negative from last month's close right now. The close last month, 1985, we're trading 1975, and today is the final day of the month. So if we close where we are now, a little bit lower, we're going to have that lower close. Likely what we're going to see as we go through September is the entire next 3 to 4 weeks is going to be a consolidation working these grid numbers. This is the September numbers that we're looking at here. So this is going to be where the resistance is. R2 is 2061. Probably won't get to that. It appears to me, based on the momentum, that we'll probably see a 2015, 2021 at some time in September. Low will probably be around 1950. So this is going to be this sideways consolidation that's set up. This will complete the video for tonight. Thanks for watching. We'll talk to you tomorrow night.